All right. So, Brian, I was hitting on this earlier with a guest. Bank of America came out with some data last week. Holiday shopping up about 4.5% over what it was last year. That seems like a really good sign for the sector. What's your just overall look at the holiday shopping season?
Yeah, look, this is going to be, in my mind, a very interesting holiday shopping season. Because just like you were talking about with some of the clothing retailers, and for a few moments ago, you mentioned Best Buy with their results yesterday. I mean, there will be winners, okay? And I think within my coverage universe, Best Buy looks to be setting up well, and I really like Dick's Sporting Goods here into the holiday. But there's also going to be losers, and the reason I say that, is I think we have a very selective, precarious almost spending backdrop. The consumer is under pressure, particularly lower income consumers. And I think as we push through this holiday season, you're going to see those consumer pressures sort of come to light and weigh upon some of these retailers that are not as well positioned.
All right, so which retailers are not as well positioned? Because you seem to be kind of indicating there's some haves and some have-nots. Is that based on inventory or just a customer base that's willing to spend?
Well, it's a little of everything. Okay, so I think first off, it's the product. What we heard yesterday, and I'll just talk about the two companies I spent most time with yesterday, and that was Dick's Sporting Goods and Best Buy. Okay, in both cases, those companies were saying, look, they have the product that people want. Okay, at Best Buy, I think you're starting to see the beginnings of a new product cycle, some AI-driven to others products. And then Dick's Sporting Goods has just done a great job with their brands, particularly Nike, again, and having those products that people want. But if you shift over to, like, say, the home furnishing space, okay, and I know that's a big, expansive space with lots of players, but, it's not, there's not as much innovation. You still have the weaker housing backdrop. In some cases, it's bigger ticket, so it's reliant upon financing. There we're seeing softer trends. So, to answer your question, I think we're going to see some softer, generally speaking, softer trends and things tied to housing. But the real key in my mind, again, what we're seeing so far is that if the retailer or the brand has the product that the consumer wants, that the product that the consumer feels compelled to spend, they'll probably win. I think it's going to be more of those lack of product cycle, lack of newness. That's where they're going to suffer.
Okay. What about discounting? You're mentioning kind of have and have not. So are we expecting to see discounting in certain areas broadly? I mean, a lot of people were worried about the consumer and the labor market going into this holiday season. What's pricing like?
Well, I think discounting is going to be interesting this year as well, because I'll just say, over the last, I've followed this group for a very long time now, and I think retailers, brands, over the last several years, decade, if you will, have gotten much, much smarter in how they discount around the holiday season and particularly Black Friday. Okay, this year may be a bit different. Okay, so we do some work tracking. We've been tracking tariff-driven retail prices lately with price adjustments, and then with that, we're looking at promotions. I think the bottom line is I think you'll see somewhat more promotional, promotional stance by a lot of retailers and brands this year, just as they try to get that more cautious consumer, give that more cautious consumer a reason to spend.
Isn't promotional just like a synonym for discount, though?
Absolutely. I mean, that's exactly what it is. And look, I think we talk a lot about, and open on your show and other talking about tariffs, right? What we've seen over the last now several months, if you will. These retailers and brands are raising prices to account for tariffs. Okay, in a funny way, them raising prices, to account for tariffs, I think now gives them more ammunition to sort of say promote as we head in this holiday season, and that's what I think we're going to see.
All right. So you gave us your top picks. One of them is Dick's. You really like that one. As we go on throughout the holiday season, what retailers do you think see kind of a rush of people going in there? Maybe people just start to feel better about things going on. Again, the government shutdown is now over. We continue to see a lot of hope for a Fed rate cut. Is there one store that you expect to see kind of a last-minute push in, or maybe have the best quarter out of everybody based on shoppers just having more confidence?
Yeah, look, I'm going to stick with Dick's Sporting Goods. I think that's really within my coverage universe. Okay, so. I have a somewhat narrow view of retail, but within my coverage universe, I really think Dick's Sporting Goods is best positioned here. And, look, a derivative call on that is Nike. I think one of the reasons that, Dick's has been performing so well is that they are, starting to see the benefits of a reinvigorated Nike brand, and Dick's is getting that better Nike product. So really my top pick here in the holidays, again, within my coverage universe is Dick's Sporting Goods.